Thank you, John.
Okay, thank you.
Thank you very much. It's a pleasure to be here today. I'm going to be talking about disruptions, real or imagined, the future of transportation. The future of transportation and transportation in general is one of my favorite things to talk about. I've been covering autos and energy and freight for about 15 years now, so it's really exciting to be able to share not just the short term, but also sort of the long-term things. And the most important takeaway that I want you to have, as I was thinking about the different things we could talk about, is that there are really two futurist perspectives to think about when conceptualizing the future of transportation. And one is the almost now, and the other is the maybe someday. And the almost now are the things where we see the emergence of new technologies that are already being applied that will be very rapidly adopted. And the maybe someday are the things that will be limited by immutable fundamental laws of physics, chemistry, and biology. And I'll talk about those, but before we get there, let's talk about the almost now. Now, we've done courses for the Futurist Institute on the topic of the future of transportation. One of those that's most closely related is the future of data. Right? Because the thing that will usher in an era of self-driving vehicles, that will be able to fulfill the needs of e-commerce, that will be critical for freight in the future, is all tied to properly leveraging data. And the good news is that things tied to data aren't limited by the physics, chemistry, and biology things that we'll hear about later. And they're also subject to the widely discussed concept of Moore's Law, where over time things get less expensive and better. And that's really something that data benefits from. And that's an area where transportation is going to have leverage. The ability to use data more effectively will change transportation in a way that violating the laws of gravity will not. So to survive and thrive in an era of disruption, the most important thing I could tell you, and I tell all of our clients on a regular basis, is that every company must be, at its core, a tech company. If technology is not a core part of your business will cease to exist. Let me give you a couple examples of how widespread this is. Earlier this month, the Atlanta Fed had its annual financial markets conference. I've gone for the last 9 years. The first year I went, there were about 40 people invited, one of which was Ben Bernanke, who spoke to us. This year, there are about 175, so it's grown over the years. About a half a dozen Fed presidents from U.S. Regional Fed banks, as well as some of the top central bankers from other countries, regulators, and CEOs of banks, hedge funds, and some leading economic and financial research folks. That's the kind of people who go to that conference. Now, every year it's different. We've talked about shadow banking. Well, we've talked about technical trading. We've talked about all kinds of different things over the years. This year the topic was artificial intelligence and machine learning. Now, when people talk about the Fed, they usually talk about the Fed being a bit behind the curve. The fact that the Fed's talking about AI and machine learning right now probably means that if you're not, you're probably further behind the Fed on the curve. Now, the one thing I'd say a couple of things that are really important about why I'm mentioning this in the conversations, because the people that were there were at such high levels. And you'd think that the understanding would be there. But the problem is sometimes for regulators, for the folks in government, they don't really understand this. And especially with something like blockchain, this is a problem. I thought by now everyone understood the difference between blockchain and Bitcoin and the different ICOs. I thought everyone got that. A few years ago that wasn't the case, but I thought everyone knew by now. I would say that at this conference, where you had some of the most senior finance people out there, someone had spoken about cryptocurrencies. And there were questions afterwards from very, very senior folks like, so blockchain is Bitcoin, right? And Ethereum is Bitcoin, right? And this kind of thing where there was a lot of confusion around something that as a technology piece is really important. It's going to take the regulators and the policymakers a long time to understand what this stuff is. And that's really, really important because the impact of the ability to collect data, the ability to transmit data, the ability to keep track of your transactions, the ability to optimize your data will be enhanced by things like blockchain. But if the regulators don't understand it, they're going to overregulate it. And there are a number of folks who are very concerned. I know there's a great article that came out on freight waves. I had seen, I think it was yesterday after some of the speakers had talked about crypto and crypto investing and the difference between Ripple and how these things all work. And I think that's probably a really important thing to look at because there are some very strong parties with very critical perspectives on these things. And so while blockchain will become important for data, while artificial intelligence will be important for transportation and machine learning will, the truth is that there are other fundamental risks when it comes to things like cryptocurrencies and tokens and things like this. And we've seen big moves. A talk I gave last week to JSOW, which is the Joint Special Operations University, which is a joint organization out of the Special Operations Command for the U.S. military forces. One of the topics that they're looking at very closely is crypto. And my talk last week was on fake news, fake money. So this is really important to understand that there are folks that are taking very critical perspectives on some of the ways that it's being used, but that in general, the engine, essentially blockchain is a kind of engine, like the way a combustion engine is, but Bitcoin's just one of its permutations, that has the ability to really improve data across supply chains. And for the freight sector, that's going to be absolutely critical. In addition to the ability for artificial intelligence, especially with, say, self-driving cars, to aggregate experiences in the cloud in a way that we previously wouldn't have, and allows for changes in freight transportation and automated trucking where there's a high utilization value add as arbitrage is captured, which I'll talk about in a second. We need to understand there are also limitations and where there may be challenges with regulators going forward and where there's actually a real political, in some cases military implications for some of the technologies and the way they're being used. But at the end of the day, you cannot be ignorant of technology. I saw a partner in Andreessen Horowitz last year speak in Silicon Valley, and this is really a take on something he had said, that we're well beyond the point where it's cool to be ignorant of technology. And that's very true, and I understand that that probably resonates very strongly with this audience. But I also want to point out that this has been going on for a little while. I've been going to OPEC meetings for close to 15 years. I think that's how John and I had initially met many, many years ago. And this is actually a picture from a critical OPEC meeting, November of 2016. It was the OPEC meeting where OPEC and non-OPEC members, so countries like Russia and Mexico, agreed to reduce their oil production to lower oil inventories to kind of push them towards a 5-year average. And that's a really important decision to make. You can see the picture, the people sitting around the table. These are oil ministers, the secretary generals, kind of at the front of the dais on the far right, Emin Dukuru. And on the right, you can see, on the far right, you can see the Saudi delegation sort of in traditional dress. But before they got to the subject of what's probably one of the most important OPEC decisions ever, where they worked with non-OPEC members, really for the first time ever in a collaboration, they discussed something else, and that's up on the screen. That's the UI/UX functionality of their new app. Keep in mind, this is from 2016. So before they got to the subject of critical policy of what their company, of what their organization, what OPEC actually does, they took the time to discuss their app. That's what they did first. They addressed the technology topics. So this is really important from a strategic standpoint because this is everywhere now. And I talk to a lot of executives and they want to think, I am really ahead of this. But the truth is, you may not necessarily be. And so if there's already technology emerging that's impacting your space, you have to get on it quickly. You don't need to be the first, and in some cases you don't necessarily want to be the first, but it's important to get there. Now, the future of data, that's critical for facilitating automated transport and the technology behind it because of the cloud. But that's only part of what's going to drive changes in freight and transport that will affect your industries significantly in the next decade. More important is e-commerce. So I want you to think for a second, that's a really smart crowd, so I know you're going to get this right. I want you to think about what % of retail sales are e-commerce right now. In other words, out of the retail sales, out of the stuff people buy, what % of that is ordered online? What % is e-commerce? Now I want you to think of a number, and because this is a really, really sharp crowd, I know that you know this is 9.1% of retail sales. Most people tend to think it's 30 or 40, but it's only 9.1. Now, it's been rising as a percentage, and we continually see new record levels. But what will we need in terms of transport when we get to 20, 30, 40% of e-commerce? And we are going to get there. So this is really important because this trend, even arguably, potentially, more than the aggregated cloud experience of every self-driving car out there, is more important consumerism. U.S. economy is driven, more than 70% of the U.S. economy is driven by consumption. And the promise of e-commerce is one that has tremendous allure. And it's one that people will be very dissatisfied with if it fails to meet their expectations. What it also has increased is the amount of stressors on the supply chain, on material handling, on distribution, warehousing, transport, and the like, and will continue to do so because we've moved from a society and a retail structure where things are sent out in batches and pallets to single-piece batching. Right? When I go online and I order stuff, right, it's usually one thing at a time. Maybe it's a couple items, but generally it might just be one or two. And if you're like me, probably your neighborhood is traversed during the day by parcel shippers, postal workers, randos in cars tossing stuff on your stoop. And the truth is that's 9.1. And these numbers are much lower in emerging markets. So this is going to become really, really critical from a data standpoint. This is why you've seen a lot of automation in warehousing and material handling and supply chain. And last mile issues, right, something that we don't think of as, sort of affecting class 8, is going to be, though, for short haul transport critical in order to meet those needs. And while we think that these kinds of futurist concepts of drones delivering packages sound super cool or interesting, or won't that be neat, we'll think that it's cool the first time. And the second time, if it's 30 seconds late, we're going to be like, where's my darn drone? We get very used to technology very quickly. Which is why, if you look at sort of unmanned aerial vehicle revenue, it's expected, over the next, in less than a decade, to increase by almost 9-fold. This is going to be probably the biggest problem in transport. Isn't necessarily the long haul. It's going to be the last mile. How do you fulfill the need of the promise of e-commerce? I want stuff, I want it right now, I want it as each individual piece. How do I fulfill that promise? Now, there are a couple things we'll talk about, but I want to talk first of all about forces in the marketplace. Because as you're listening to this, and as you listen to the speeches throughout the day, and you talk to folks who are doing demos, I think it's important to think about the two driving factors that impact markets. And I remember when I was first kind of a younger economist in 2004, early in the year I'd made some bold predictions that oil prices would go over $50. And at the time, oil prices were sort of around 30-ish. And I had people kind of call me. They thought I was crazy. They really did. And that was ABC News. So, from there, it kind of was a sliding scale. By the end of the year, by September, actually, oil prices hit $50. And I had a couple traders come over to me, and they said, you did a really good job. We think you're a good economist, but we want to know if you're a great economist. And I said, okay, there we have a question. What are the two forces that drive markets? And I thought, well, this is a softball, right? Like supply and demand. And they hung their heads in shame. And they said, we thought you were better than that. We thought you knew that it was fear and greed. And so as you think about technology, I want you to consider, you don't necessarily need to be the very first, but if a technology is catching on, you need to adopt it rapidly. Right? I think Google was the 21st search engine. It wasn't the first. In fact, those who kind of went first, kind of had some of the pain of taking the lead, but they became the best at it. So you don't have to be the first out the door, but once you see something's moving, you have to be on board. It's like a conversation I had one time with the chief risk officer of one of the biggest pensions in the U.S., and I was concerned at the time about muni bonds, and we had a conversation. I said, are you concerned? He says, nah, if it starts to go down, we'll be one of the first out. So as long as you're viewing yourself that way, right, like if the technology changes, you'll be in the front of the pack. That's something you need to make sure you're doing. And as you're sitting here and you think about fear and greed, right, I think that, maybe a softer way to say this is, I think there's still a lot of fear about what disruption will do to industries, right? But I think that there's also opportunity. And so making sure that that's in a balance and not just getting kind of twisted around by that fear narrative, which is a very compelling one, especially sort of in the field of robotics and work. So let's talk about the future of work for a minute, because work changes, and transportation is an area where we're going to see big changes in employment. People talk about a transpocalypse for jobs in transportation. Let's talk about what this actually looks like, and I want to talk about it through that lens of what's happened to supply chain, another area that's seen automation. But before we do that, I want to ask you to think for a second what the most common last name is, what the most common family name is in the English language, right? And I'm sure many of you very quickly realize this is Smith, right? And although jobs will change and professions will change, no matter what happens in the job market in the next 50 years will be nowhere near as tectonically shocking as what happened in the 1800s. Right? Of course, blacksmiths were also part of the transportation infrastructure, making horseshoes and all. But it's important to realize that if you lost your job in the 1800s, or there was a change in the way your profession, your guild operated, you didn't really have options. You essentially went to a city where you knew no one. You may never see your family again. You may never talk to them again. And that was it. And you had no idea how things would work. You also had no opportunities really for additional training, because other guilds like millers and tanners were also being disrupted during the Industrial Revolution. But today you can take any number of online courses from the palm of your hand, and there are multiple job search aggregators. Indeed.com is the biggest. They've got 20 million jobs online at any different point in time. So although there's going to be disruption, the ability for the labor market to adapt is likely to be quicker than ever. Let me give you another example of how the labor market's changed and how this affects trucking and how this affects freight. In 1978, the most common job by occupation, the blue here, was secretary. Today, we don't generally even use the word secretary. In 2014, Truck driver was the most common across states. And I wager 30 years from now, we probably won't use the words truck driver either. It's probably more likely something like multiple automated vehicle engineer, something like that. But there probably won't be truck drivers the way there generally aren't secretaries. But yes, the BLS estimates put the number of jobs at risk in transportation somewhere between 2.2 and 3.1 million. But even though those jobs are at risk, I'm sure many of you are aware, as I know my clients, that ship goods are aware. There's a big shortage of CDLs. There's huge demands on freight that can't be met. And whenever you have that need that can't be met and you have a market that's under pressures where you see prices rising, you can't even get the people you need, that's where folks look for arbitrage. So the automated vehicles, especially for trucks, make a lot of sense, and a lot more sense than for cars. And so I tell you two things about this. And one is, right, the utilization rates of commercial vehicles are going to be much higher than they are for personal vehicles. And as for personal vehicle fleets, you know, the biggest challenge isn't the tech or the insurance, the regulation. The biggest challenge to the self-driving platform as a service concept of cars, as my wife would say, is that people are gross. I don't want to ride in a self-driving car that doesn't have a person in it on a thirsty Thursday in a college town. I'm just saying, right? You know, it's a real thing, right? Little kids going to soccer, you got to go, right? Like, I'm just saying these are going to be gross. So that's my biggest concern when it comes to self-driving vehicles as a fleet sort of thing. It's going to take a while to get there, but, you know, that's likely to happen as well. But the commercial value, the fact that there's a shortage of drivers, there's no shortage, there's a value add of having personal vehicles automated, but the economic value add of transportation of automating trucks is quite clear, right? I mean, the value of transport, and this is what people lose sight of. What is the past of transport? Well, transportation as an industry is effectively trying to solve an age-old problem. And the problem is, how does your stuff exist in two places at the same time? And, right, you can't be at two places at the same time, but if you explain to someone from the Middle Ages how goods get transported around the United States now, they'd probably tell you that, relatively speaking, the goods are in two places at the same time, on a sliding scale. And the reason you want them, or you want the people in the two places, is because there's an economic value add. It's not just, I don't want to have to park, which is the main reason I might take an Uber or whatnot. It's because there's big dollars at stake. And the automation side will present the ability to capture that. Now, it's not just transportation where there are jobs at risk. A study was done in the end of 2016, came out of the Office of the President. 44% of jobs that do not require a high school diploma are considered highly automatable. If you have a high school diploma and required for the job, it's 19%. The minute you hit a trade school, it's only 8%. An associate's degree is 6%, a bachelor's degree 1%. And if you're doing a job that requires an advanced degree, a graduate degree of some kind, those jobs are not automatable essentially at all. But if you're doing something that requires less than a high school diploma, those jobs are going to be gone. But e-commerce creates jobs. And this is really important because as we think about the future of transportation and we think about what will jobs look like, what will your staff look like, what might you be doing in the future, this is a really critical thing to think about. Retail sales. These are the jobs at department stores. We've all heard about their demise. You can see the drop in the number of jobs since the Great Recession, which is this big gray bar on the right. The drop on trend in the number of retail department store jobs. You know what's actually a little bit bigger than that number? The number of jobs created in warehousing since the Great Recession. And this is tied to the e-commerce side. And by the way, those warehousing jobs pay more. The best paying retail job pays less than the lowest paying warehousing job. And warehousing jobs can pay more than up to 3.5 times what an average retail job will pay. This is, by the way, part of the reason that 2 years ago I founded the Futurist Institute. I went to RoboBusiness, which is a big robotics business conference, and I was talking to the head of robotics, Imagineering at Disney, and he was telling me that in order to get a roboticist, it takes you about 10 years, right? They come out of high school, they go to undergrad, they go to grad school, they do like a postdoc, and then they're ready, like 10 years later, it's ready to go. And robotics is trying to shorten the time frame with which you can get people who can work on robots, can work on automation. And I thought, I'm in finance, I know there's all these fintech disruptive things going on. There isn't an organization that helps analysts or economists or strategists think long term. And so I founded the Futurist Institute. And I would argue that, things that we're seeing here, as part of what FreightWaves is doing is going to be really important going forward to think about how you can apply the technology risk to what you're doing. But thinking about your business in those terms, what are you going to do when the disruption comes, is a really critical thing to think about. One other thing I'd share about the change in jobs and the self-driving trucks is a problem that most people don't think about and most people don't talk about. One of the biggest challenges to self-driving trucks is what happens when one breaks down. So if you think that a self-driving truck is complicated, the truck that goes out to fix that truck that's broken down somewhere will be infinitely more complicated. So that's something also that folks need to be aware of as not just a risk, but an opportunity, a question that has not yet been answered. As for risk management, the data side, it's really important to consider the financialization of markets that's been ongoing. This is critical. The invisible hand is digital. This is a technical trading chart. This is the price of oil. There's a lot of lines up here. I won't discuss all of them. I'll just discuss the red one, which is a line I've used when looking at the price of oil since 2004. See the red line, and the price is above the red line all the way since the beginning of September. That's the 100-day moving average. I've watched that as an important floor for the price of crude since 2004. Now, we do technical analysis across a number of markets. I'm actually a charter market technician, so I spend a lot of time looking at the invisible hand in the markets. These kinds of things will continue to be critical. At the end of 2014, we emailed our clients and said, we're going to be doing more technical analysis. We're going to look at these charts and lines on the charts, and we're going to tell you what they mean and what that should mean for your price implications, which is why we were talking to our clients in December about the risk of $80 oil this summer. And I got an email back from one of my clients. It's a foreign central bank, one of the big ones. And I thought I was going to get called out for doing technical analysis, because a lot of people want to talk about fundamentals in a market. But the truth is, markets are driven by a lot more than fundamentals. And this is possible because of data. And the email I got from one of the heads of foreign exchange trading at one of the big foreign central banks, right? There's only like 3 really big foreign central banks that we talk about. And he said, thank you so much for doing this. This is so important. This is so critical. We really, really appreciate it. Look forward to your research. Now, people talk about long-term investing and they talk about long-term planning with markets, but the truth is that's a very nice fairy tale, and the Brothers Grimm have some other great stuff for you if that's what you're into. But the truth is that short-termism is how financial markets and how anything financial, anything that's traded is going to be driven, which makes risk management absolutely critical. And as we see freight liquidly traded, as you see anything liquidly traded, it's going to be important to leverage data to have proper risk management solutions. And that's probably a longer discussion for another day, but the important part is to understand that markets don't just trade on the fundamentals of supply and demand, they trade on the fundamentals of fear and greed. Now, the other thing I want to say is that risk management depends very highly on a culture of data. So as you're thinking about the future of transportation and you're thinking about the of data, and you're thinking about becoming a tech company, you need to think about what are you going to do with that data. Harvard Business Review published these statistics last year. It was a survey of Fortune 1000 executives on what are they doing with their big data. And the blue lines are things that have been started and seen value. The red have started and not seen value, and the gray haven't even been started yet. Where do most companies use data and technology to see financial value? All the way on the left, decreasing expenses. What are they not doing? Well, what they're not doing is transforming their business for the future. They're not using data. They haven't started doing that. They haven't started adding revenue. And some of them have started but haven't seen the value yet of establishing a data-driven culture. And I'd argue because that's a longer-term process. But the truth is you need to find different ways to apply the data here. And by the way, if you haven't done this stuff with the decreasing expenses, that's a gimme. That's stuff that folks have been doing with their SAP code for a decade now. So we've talked about the almost now, right? The use, and by the way, when people talk about artificial intelligence and machine learning is a lot of Booleans, a lot of binary data stuff. It's really just looking at lots of data and doing analysis. And that's, a lot of folks like to play what Jimmy Song, one of the, kind of a famous person in the blockchain and Bitcoin space would say is buzzword bingo. But at the end of the day, it's still using data to come up with important implications. So let's talk about quickly the maybe someday and the immutable rules of physics, chemistry, and biology. I'm not going to talk too much time about off-world stuff, except to say that's definitely maybe someday, because when we think about that, there's a biology implication. The truth is that earlier in the year, I was at NASA in Houston and we had a tour from an astronaut who'd been on 4 different missions, and the discussion was around the biology of living in outer space. And the problem is that we're physically geared to live on this planet. If we're in outer space or on another planet, we see big implications in terms of what happens with muscular degeneration, loss of vision, other kinds of really big problems that are going to take a long time to fix. I mean, if there was a new anybody here have allergies? If there was a new allergy medication, it would take 10 years to get a new allergy drug approved. How long is it going to take to get approved for people to go in space where they could lose their vision and their bodies could essentially fall apart, right? So it's going to take a long time for that stuff. But from a supply chain transport standpoint, big disruptive stuff over the next 15 years or more, and probably longer, are things like 3D printing. Right? So this is going to result in some level of distributed manufacturing, but there are limitations, right? It's not going to be like Star Trek where you're pulling stuff out of thin air, because the thin air has molecules that also come off a periodic table, and unless, you can make, Beanie Babies and hot dogs out of oxygen and nitrogen, it's going to be a really, really boring set of things you can print out of thin air. Right? Because you can't violate the periodic table, right? This is why alchemy didn't work. You can't turn lead into gold. It does not work. You can't create a new element from another element unless you get at the very end of the periodic table where they're doing, more radioactive sets of research. But if you're going to try to print yourself a new pair of jeans, you're going to need the actual materials that go in the jeans. So from a transport standpoint, the locations of production may change, the type of machinery that produce things will change, but you're still going to be transporting a lot of stuff. Maybe more commoditized, but it's still going to be a lot of transport. For construction, a good friend of mine is running a startup. They 3D print buildings, but they also have a certain substance that's a chemical they've created. It's bio-friendly, and they print the building with that. Whether lumber's being shipped around or then you start producing this chemical en masse and you're transporting that around, 3D printing is not generally going to disrupt it until you can pull molecules out of thin air, which seems to be a chemistry problem we probably won't get past. Hyperloop. So I've been involved in some of these things, so I'll talk briefly about it. And a lot of folks think this is a really new idea and this is really hot. I was on a debate team in the early 90s, and one of the things that we debated was the future of energy and transportation one year, and a concept that was widely being discussed in the early 90s were these kinds of pneumatic tube, maglev kind of trains. So this idea has been around for 25 years. It is moving forward. It's going to take time. Because if you want to build it across large spanses, I mean, I'm sure, how many people here live in a highway where that highway's been on construction for what feels like forever, right? Right? So if that's true of a highway, even if you're putting it underground, it's going to be true of the Hyperloop. Will there be select areas? Sure. Is there more of a value for freight than people? Absolutely, right? There's an economic arbitrage of sending the materials more quickly. There's a financial benefit for freight. Will 15, 20 years from now this be a monstrously disruptive thing for transport? For sure. Is it going to happen in the next few years? Well, right now, Elon Musk is drilling, when he's not sleeping on the floor of his Tesla factory, he's drilling, underneath the city of LA, kind of the first test for the Hyperloop. But I would also note that there's already a subway under LA, and many people from LA will tell you it doesn't exist, right? But it's already there, and no one uses it. So this is important to keep in mind when we think about technology, because this is an idea that could work, but the practicality of drilling through the ground, and look, don't get me wrong, the Boring Company idea, that makes sense, right? I almost bought a blowtorch, but I've only been married 2 years. I'd like to stay married a little longer, so I didn't get the blowtorch. But the point is that these things take time. And by the way, if there's any hiccups with Tesla, that will likely spill over into expectations for Hyperloop, right? If someone touches a technology and it doesn't work so well, or there's other kinds of problems with the business operations, that can have long-term implications that will push a technology out even further. So it will come maybe someday, but I don't think it will be imminently disruptive to this industry. And now let's talk about electric vehicles. A lot of folks are super excited about this unless they know the chemistry. Here's the trick, gang. We use about 100 million barrels of oil per day. That's 4.2 billion gallons of oil per day. And that's not like equivalent. I'm not converting coal into barrels. I'm not converting nat gas into barrels. I'm just saying oil out of the ground, Jed clamp it, right? Like bubbling crude, 4.2 billion gallons a day. I would not consider that to be, generally speaking, a rare substance. However, something that might have the word rare in it, like rare earth minerals, that go into things like, I don't know, electric vehicle batteries, are probably quite rare. A news story out this week from Alpha Sites that said that part of the reason Tesla is suspending its trucks is because the battery would cost $180K, which is the price of the truck. Moore's law does not apply to chemicals on the periodic table that are in limited supply on planet Earth. This includes the stuff that goes into the electric batteries. Yes, it might be cool if you live in LA to drive a Tesla, but one charge won't even get you to Vegas. Consider also Apple. Very recently, Apple secured mining rights to cobalt mines. Apple is worried about battery metals. Apple. You ever think about the size of a phone and a computer battery versus a car or a truck battery? There's a size difference, guys. Yeah. So 3 years ago, I started having conversations. Hedge funds started calling me because I cover metals and I cover commodities and I cover energy. And they figured out something that's not a big surprise. The demand for the metals that go in the batteries is going to rise. So if you secure some of those supplies in the supply chain or you buy them, you'll make a lot of money. There's not much of this stuff out there, and there's really not enough to really change things over as quickly as people would think. As far as driverless cars versus electric vehicles, in September 2015, the World Economic Forum did a survey of its members. 79% expect 10% of all cars will be driverless by 2025. In contrast, the Energy Information Agency, which is part of the U.S. Department of Energy, expects through 2040 between 1 and 6% of new vehicles will be electric. Between 1 and 6% of the new cars sold every year. Now, as we go to a commercial platform fleet and people figure out how to have a Uber driving you around or whatever it's called, and we resolve the issue that people are gross, I'm sure that one will be easy to fix. Once we get past all that, this percentage will probably go up, but that also means the cost will as well. And even though people bemoan $3 a gallon of gasoline right now or $80 oil, it's a lot cheaper than it was at its highest price point, and even at that price point, electric vehicles don't necessarily make financial sense for non-commercial purposes. But for this industry, it does, because unlike our cars, which I'm assuming, right, like I'm hoping all of our cars are sitting somewhere in a parking lot, unless anybody works for Waymo, and then your car is probably driving itself around. But generally speaking, hopefully, your car is, like mine, sitting in a driveway somewhere. Those cars have 5% utilization rates, but commercial vehicles have close to 100. And that financial difference will make all the difference in the world in terms of how quickly electric vehicles are adopted. Now, the last thing I want to share is a really, really, really big secret. In 2016, when I was working on my book Jobs for Robots, I saw this picture. It's a poster. It's for an investment fund. It says, "We believe mutual funds should be managed by humans, not robots." There's kind of a picture of the robot in a suit sort of thing. Now, I'm in Texas. This was in Texas. And I would ask you to think for a second, if you were to think, this is 2 years ago, if you were to think of places that would be really dialed into technology and fintech, where would you think that would be in Texas? The people would know about robo-advisors. They would know about fintech 2 years ago, that they would know what this stuff was. Where do you think? What do you think? Austin? Any other guesses? No? Dallas? I know you guys are kidding. I know you know this was in the Amarillo airport in 2016. My wife's from Amarillo. When you get off the plane, they smell what people locally call money. It's the cows. And if everyone there would have understood this and known what the implications of this are 2 years ago, I might want to think I'm up on technology. We might want to think we're up on technology. But chances are a lot more people know what's going on than you might even realize. And with that, I'll put up our standard disclaimer. I know you guys are speed readers. And the last thing I'll say is Craig Fuller contributed to a book we did in January called The Robot Automation Almanac. If you want a free copy, we've made it free this week on Amazon. You can go to it. You can find the book, The Robot Automation Almanac, on Amazon, or you can just go to robotalmanac.com, and it will take you right to it. This was actually a collection of 23 articles from different experts about what was going to happen this year in automation and robotics, and everything we've seen in the press in the last few weeks was in this book that came out in January. And like I said, we've made it free, so anybody who wants to download a Kindle version, you just go to Amazon. It's free to download, and I'm happy that Craig had participated and contributed to the book. And if you have any questions, you can shoot me an email. And with that, I thank you very much, and I appreciate being here today. Thank you very much.